Hi, this is Kerry Arteg with Wicked Stocks, bringing you the daily Apple report for Tuesday, December 27th, 2022. Before I jump into the charts, just please click like if you would each and every time you watch the daily Apple report or any content that we post to the Wicked Stocks YouTube channel. That includes the daily Tesla report. It helps us out a great deal in being found actually on YouTube, believe it or not. The number of likes per views is the critical algorithm, I guess. Also, become a Wicked Stocks YouTube channel follower, subscriber. That'll provide you notification each and every time new content has been uploaded to our Wicked Stocks YouTube channel. That includes the daily Apple and daily Tesla report. And starting next week, the daily NVIDIA report. So if you trade or invest or are looking to possibly trade or invest in NVIDIA, we'll be offering daily analysis like this in NVIDIA. And finally, share the content if you would with friends and colleagues. So you're looking at the page one of the newsletter right now. I'm going to start with kind of the big picture. This is something you're probably familiar with. A new descending 1/3 speed line based on last Friday's low. That is the lowest this market has been since the August high. And so it requires a reconstruction of a trend-defining speed line study, and that is at 144.79. There's been a very similar variation of this speed line over the last couple of months. Really, since the October high, we've tested it, pushed through it, and have fallen back each and every time in decisive manner. And holding below 144.79, I maintain a 123.21 1 to 2 month target that we may actually be in reach of over the next week or two. In fact, should be in reach of over the next week or two. So that is the big picture. Of course, we've got the 129.04 June low. I still have that as a session containment level, able to contain session weakness. And above which we could, over the next few days, I don't know about today, I'll get to that in a second, test 136.72. Let's actually take a look at that right now. 136.72. First of all, I'll show you the kind of the big picture 136.72. I already showed you the 144.79 speed line that is able to contain monthly buying pressures, as I mentioned earlier, and below which the 123.21 level is likely over the next month or two. And for the week itself, we've got a combination former channel bottom that I know you're familiar with if you've been watching the daily Apple report. This was a secondary sell signal about a week and a half ago. We came close to retesting it a few days ago and fell off again. And it's also in line with a new short-term channel top that is based on the recent lows last week. You can see here, horizontal structure is actually at, as I recall, 136.56. In fact, I think I can show that in another diagram. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. That's right, 136.56 to 136.72. I just rounded up to the 136.72. I don't expect to see that today, but it wouldn't be unprecedented for us to test it. And, I would say chances are strengthened in that respect if we happen to push or open today above 132.38. 132.38 is an upside Fibonacci just up the last few days. It's also in close alignment with last Friday's high of 132.41, which is the move low following the August high. So it has pivot point qualities in and of itself. So pushing or opening today above 132.38. I have my doubts as to whether we'll actually reach 136.72, but we might on the way up. We've got 133.23 and 134.37, both carefully chosen minor points for those of you who trade Apple aggressively on an intraday basis. Know that holding below 132.38 will keep the 129.04 June low in reach today, where we can place a daily low. And if we close today below the 129.04 June low, we should, within just several days at the most, test the 125.87 descending channel bottom. We could probably show that a little bit better. Can I? Yeah, right here. So closing today below the 129.04 June low should yield possibly tomorrow. I would say Thursday at the latest, 125.87, which is the beginning of a narrowing zone of meaningful, targeted, longer-term support down to 123.21. Longer term being the 123.21 channel bottom. And 123.21, as I've been mentioning, it's a one-year channel bottom, and it's also in close correlation with, where are you? A rising two-thirds speed line that is projected off that March 2020 COVID low. And that is a significant pullback low, a significant low on this chart, and it is a trend-defining line study in itself. So this area, 120.27 to 123.10, if tested over the next week or two, and it is expected over the next week or two below 136.72, the low 120s able to contain selling through the first quarter and quite possibly well into next year. And that's as low as I'm going to go on this chart right now. Now, if we do close today, and it's not going to happen, but if later in the week we close above 136.72, we've got a good low through next week, because over the following 3 to 5 days, we should then continue up to that 144.79 long-term speed line, where once again, we can top out through January and fall off again, and below which, I'm going to say now by the end of February or sooner, because we've kind of forwarded about a month since I've been talking this way. Over the next month or two, we should test 123.21. The big question is whether we'll rally back up to 144.79 in the interim, and the answer to that is, once again, yes, if we close above the 136.72 descending channel bottom I showed a moment ago. 144.79, able to contain buying through January, and even if we close above 144.79, we're not out of the woods yet in terms of longer-term bullish recovery. Now, there is a solid buy signal on one count above 144.79, and you can play that, as I've been saying, but just know that the following week or two, we test 153.69, and I think this is our real upward pivot point through Q1. So we're heavy below 144.79 into February trade, let's say, and we really don't turn bullish into February trade unless we can muster a settlement sooner than later above 153.69. Until then, it's a bit of a moot point. And I think I pretty much rounded it out for Tuesday's Daily Apple Report. Please click like if you haven't already, and subscribe. I'll be back tomorrow with Wednesdays, and you have a great evening.